Good morning. Welcome to the trade setup right here on BloombergQuint Live. I'm Neeraj Shah. Lots happened over the weekend, busy weekend as well, and fair degree of news for this morning. So let's get started. First, in terms of the global news, remember there's a lot of to and fro around geopolitics, obviously. So there's a new round of Russia-Ukraine talks, which will take place on the 29th and 30th of March. So assumes importance, but now I think everybody's resigned to this being a long drawn affair. So any surprises out there positive in nature should actually help. Otherwise, status quo would be that these talks have reached a particular place and then there'll be some more to happen. Let's wait and watch. Yemen's Houthis claim attack on the Aramco facility, and while crude spiked in Friday's session as a result of that, it's come off as well. I reckon what's happening in China is certainly playing a part in the crude demand assumptions, because Shanghai, remember, for example, will lock down half of the city in turns to conduct a mass testing blitz for COVID-19. There were some cases imported from Hong Kong into mainland China, as a result of which China is going through a really deep round of COVID issues as well as lockdowns. So it's quite unlike some of the other places wherein maybe there are COVID issues, but there are no lockdowns, or at least not in the same fashion as China. Just hopes that this is not a precursor to what had happened in 2020 as well. Let's just wait and watch. I think back home in India, everybody, everywhere that I go to, has forgotten the use of masks. Maybe it is the right thing, I don't know, but just erring on the side of caution. Let's just stay safe. God forbid there is another round in India. Nevertheless, what about the markets? The US markets, ho-hum day on Friday, you could argue that there was a bit of an uptick, but I think largely a quietish kind of a move for the US markets, though the NASDAQ has bounced back really well in the last couple of weeks. There's this chart on the Bloomberg terminal which shows how well the last 2 weeks have been for the NASDAQ, and there's a bit of a rebound at play here. Can this continue? Remains to be seen. Can this be reminiscent of what happened in October? Remains to be seen, but certainly a bounce underway on the tech shares in the US. Asia and the SGX, I reckon, would be flattish. Maybe some markets would be marginally higher, some markets marginally lower. I really doubt there is a case for a really big rally or a really big fall in either direction for Asia or for the SGX Nifty. I really doubt that there's a mega move underway out there, just about 7 odd points. So not surprising really what's happening out there. Now, what's the trade setup for the day like? So the nature of the components are changing. I think the unfolding of the geopolitical news, of course, will be the key market driver. Like I said, if there's a positive surprise in the talks, maybe that helps. But otherwise, that keeps on impacting world markets. And I reckon as a part of that, India as well. The Nifty support is seen at the 200-day moving average of 17,036. And people will be keeping a keen eye out for this. Shorts, only and only below 17,000, below this 200 DMA. Otherwise, it's very difficult. Remember, staying long largely helped in the market, even though we ended the last week slightly lower, but staying long selectively had helped for the better part of the week. So I think if you want to go short as well, go short only below 17,036 mark. Remember, just in terms of levels, keep in mind we'll be talking to Gautam Shah today at 9:30. So I think on talking points, so viewers might want to tune in for that to get a sense of what the levels could be like and how should you approach trade both on the futures and the options side. But I think in Saturday's BQ Edge event, we had the JM Financial head of strategy, derivative strategy, saying that the RSI does not quite indicate that you can go naked short or even take puts for that matter. So for now, don't be short, but be careful with the longs. FMCG, cement and media stocks likely to remain in focus for today. And I'll tell you why when I talk about the stocks to watch as well. Fund flows, foreign investors sold about 1,507 crores. The guys got about 1,373 crores. And as a result of all of that's happened, FI outflows in the Indian stocks have comfortably crossed the 1 lakh crore mark in 3 months. Now, the point is, viewers, you've got to think this through, that in a normal scenario, a number of even 10,000 crores or 15,000 crores over a period of 1-2 months or 3 months would have resulted in a really sharp reaction. We did see a sharp reaction, by the way, for our markets too. But the bounce back and the net impact from 18,600 odd to 17,200 odd tells you how well the Indian markets are digesting the FI flows. Remember, March would have been a great month for DIIs as well because of the tax saving funds and some of the other multi-cap fund inflows that have come in. So as a result of which, the domestic mutual fund flows have been pretty strong. I think from what I remember by talking to some uh, mutual fund managers as well as uh, reading a morning note from Omkara Capital is that the the inflows for the month of March could be as high as 25,000 crores. Let's wait and watch. We'll get to know when the mutual AMFI releases this mutual fund data. Pretty strong data to watch, really. What about stocks to watch? Well, for you, me, and everybody else, now there will probably be one place to go to for watching movies, PVR Inox. That's the combined entity that is likely to get formed. So PVR, Inox Leisure, and Gujarat Fluoro, which is the holding company of Inox, all three are key stocks to monitor today. PVR and Inox Leisure have agreed for a merger in the ratio of 3:10. It will become India's largest chain. The combined entity will be named as PVR Inox. The companies will have a network of 1546 screens across 341 properties. Ajay Bijli of PVR will be appointed as the MD of the merged entity. And the merger will happen at about 550 rupees per share for Inox, which is about a 17% premium to the current market price. Now, there's a lot to watch out for here. Whether the combined entity gets the merger approval from Competition Commission of India or not. I think they also look at the revenue size, and the recent revenue size of the combined entity was less than some 1,000 crores or something, which is why it qualifies for a merger. But I think the pre-pandemic revenues are well above that number, and therefore depends on which way CCI looks at it. Frankly, it creates a behemoth which cannot be challenged per se in the multiplex arena for sure, at least. And therefore, there is a cause of the CCI to say that, hey, do we want to approve this? Be that as it may, that is not in our hands, that is in CCI's hands, so let's not time preempt. But the larger point being, if this combined entity does take shape and form and does get the approvals, it is certainly a win-win for both because there's virtually no challenger, and therefore, and it's great news for shareholders. I don't know how great news it is for you and me as consumers, because then whatever they do, we have no choice to go anywhere else to. But yeah, on the current math per se, Inox Leisure shares should move up. There is a arbitrage there. Gujarat Fluoro as a holding company should move up. I don't know if PVR moves down or PVR stays stable. I think time will tell. But all in all, watch out. Net net, it's a positive for both, and therefore could be interesting. I think CLSA Note said the same as well. The other stock in focus, and maybe brings all the small cap cement stocks in focus, is Sagar Cements. They've approved the preferential allotment of equity shares to Premji Invest. Premji Invest will invest about 350 crores at 265 rupees per share. The deal values the stock at nearly $60 per ton, and therefore Sagar might be active today. I think, as I said, some of the other small cement stocks also might be in focus. So watch out for the cement pack, by the way. Adani Enterprises, two units of the company, Mahanadi Mines and Minerals and MP Natural Resources, each have won a coal block in Odisha and Madhya Pradesh. In these times, coal is gold. Wonder if Adani Enterprises reacts. Let's wait and watch. Emami, they bought Dermicool from Reckitt Beckinsale Healthcare for 432 crores. It's not a very large acquisition from Emami, but it adds about 4% to the revenues, but it makes Emami the leader in a cool top segment. So watch out for Emami. Maybe it reacts today. In which ways, FMCG is in focus for multiple reasons. While companies will see an issue with margins, selectively, could there be a bit of a shift happening, for example, to ITC? We're seeing that stock do really well. Do people believe that it will get less impacted because of the commodity cost inflation, and therefore are people moving to ITC from the other FMCG names? That's the key question. Remember, the move in ITC last week was pretty stellar. Before we get CK Narayan's comments, Virat, I'm sorry I'm throwing this out of the blue, but can we get the 1 week chart or a 1 month chart for ITC up on the screen? Because really the price and volume action on ITC has been quite stellar in the last 1 week. Big move. There's a fair degree of short covering that's happened in ITC as well. Look at that. That is a 1 month chart. It certainly moved this month from level sub 220. It is now at 253. That's a 17% up move on ITC. It has done these things in the past and then failed to deceive. Is this time different? Again, CK Narayan makes this point in his weekly column. You can all read upon it. It's there on our website. He says that the only occasion when I found a larger range price bar on ITC was in July 2018, but he feels that that too may get bested within this month. Such large price shifts are often the signal of a long-term change in trends. Can this be the long-term change in trend for ITC? Remains to be seen. By the way, Gautam Shah, our guest today on Talking Point, uh, about 9 to 12 months back, if I'm not wrong, had said that he's turned extremely constructive on ITC. Since then, point to point, the stock has given about a 15% return, though it's had volatility. So 15% is not bad considering the Nifty's been okay as well. I think the key to ask him today is that has it changed? Has this strengthened his resolve on ITC and can it do more? So let's wait and watch if that were to happen. But really strong move on ITC. Yeah, this is the CK Narayan story and how he describes the volumes, open interest, cash delivery. Really, he spent a lot of time on ITC in this week's column. It'll be something that you might want to have a look at it. Some of the stocks to watch include a Gale India. The board meet on March 31st to consider buyback of shares. So that is interesting. Indigo and SpiceJet, because international flights to and from India started on March 27th, and this should favor Indigo for sure. But keep in mind with crude prices where they are, I think every flight might actually be loss making. So remains to be seen how people view this. And PTC India Financial, wherein they've got an income tax refund of about 50 crores. Maybe the stock reacts, so just keep that in mind. Morgan Stanley is coming with a note on MCX with an underweight rating and a target price of 1300. The reason I bring this is because everybody was so gung-ho on MCX because of the options trading, option contracts being allowed by SEBI. MS makes that point that it's been allowed, but they're saying that historically execution and adoption has been very slow in case of new initiatives on MCX. And they make this underline this point by saying that how index futures ADTV itself has failed to pick up any meaningful scale over the past 1 year. It's taken 1 year and still the ADTV from index futures has failed to pick up any steam. What's the point? I mean, yes, options are allowed. Will they result in profitability is the question that Morgan Stanley is asking. And therefore saying that, do you want to get excited on that development for MCX? A pertinent point. Let's wait and watch. Lastly, viewers, just actually some stocks that I want to point out before we make that very important point. So spot power prices and merchant power rates have actually risen, and therefore you got to watch out for companies in the merchant power space like JSW Energy. Remember, they got a fairly high merchant power exposure. So that is one. Escorts, today is the last day of the open offer. So that is something that you got to keep in mind. And interestingly, while there was a talk that government has said that they want to ban sugar exports, I think at least the rumor mills were there. I think the government has gone on record saying that there's no plan to ban sugar exports. So that could be interesting. Motherson Sumi's wiring harness business will list today, and that's actually a very big moat business. So do watch out for that one as well. So those are a few things that I think everybody should keep in mind in terms of stocks. Lastly, before we wrap up, a big event happened in Friday on the geopolitical front. Don't know how it will develop, but most of you might have seen what our External Affairs Minister, Mr. S. JAISHANKAR, had to say. I'll bring it up. He said that we've had 15 rounds of talks between senior commanders and progress has been achieved on several friction points. This is External Affairs Minister saying post the meeting with Chinese Foreign Minister Wang Yi. I mean, this is something that everybody across the world will be watching with close breath and bated eyes. Very interesting to see if indeed there's a bit of a thawing of relationships between China and India. Thanks so much for tuning in, viewers. Have a safe, profitable day ahead. If you're stepping out, I urge you, please keep your masks on.